Welcome back to Closing Time with Nick El-Tawil. I am, once again, Nick El-Tawil, and I'm here today with Johnny Sloboda. Johnny, how are you?
I'm all right.
Did I butcher your last name?
Actually, that's the European pronunciation.
Sloboda?
Yep.
What's the way you pronounce it?
I mean, I typically stick with Sloboda when I'm here,
Sloboda.
but Sloboda is also 100% acceptable.
Okay.
So,
Yeah, people say my last name is El-Tawil, and that's how I say it in America, but in Egypt, Tawil is what they say.
okay.
Yeah.
It's the same kind of idea.
Same kind of idea, yeah. And if someone calls me Tawil, I'm like, okay, I'm very happy with that. Like, I'm not mad at all about it. So Johnny, you got a lot of stuff going on. I don't think we've ever actually talked in depth about all the stuff you're doing, but I know you're a big crypto guy for sure.
That's true.
It's true.
Yes.
Tell me about your journey in crypto.
So I started getting interested in crypto maybe, the first time I heard of crypto was 2012. And
Same time I got Bitcoin.
of course, it's one of these things where the best time to get into crypto is 12 years ago when you first heard about it, but then the second best time is now. So I thought it was more of a curiosity then, thought it was interesting, but I didn't really start getting into it until, say, like 2018 or so. And I started playing around with some of the stuff with Ethereum. I thought that was very interesting because it was, Bitcoin had very good, interesting technology, but Ethereum added this layer of smart contracts, so that really drew me into it. And around that time, after that, I started working in, I've been in software my whole life, but that's when I started working in the finance space as a software guy. And I learned a lot about traditional finance, and I really enjoyed it a lot more than I thought I would. And there's some parts of it that I didn't care for, and I realized that crypto had a lot of the best parts of it that I liked the most at the forefront as the focus, and some of the parts that were a little bit more mundane were not part of crypto. Like all this kind of compliance and regulation kind of stuff. I get that there's a need for that. I understand why it's in traditional finance. There's definitely an argument for it. But as a software guy, I really like the technology focus. Where crypto, the tech is the most central part. Whereas traditional finance, there's a lot more business concerns as well. So after that, I started working in crypto, and I worked at a couple of crypto startups, and that's where I really got to learn a lot more about the nuts and bolts that goes behind crypto and actually makes these blockchains work. And yeah, at this point, it's just something that I've really found a passion for, and I am probably going to stay focused mostly on crypto going forward. I'll probably do other kinds of software too, but now, yes, I have become an official crypto guy as part of that. So that's my crypto journey so far.
That's cool. First time I heard about crypto, also 2012. It was right around the time the Silk Road got busted. So there was a big article in the Wall Street Journal, and I read all the financial news, in New York at the time. Wall Street Journal, like the Bible for anyone who works in real estate finance, anything like that. So I'm reading this story, and it's like this guy is just a massive drug dealer off the internet using Bitcoin, and I'm like, this is so cool. So I started buying Bitcoin, and I actually played around with it for a few years, and I came to the conclusion, I think around 2015, 2016, that this is worthless. It's only ever gonna be good for laundering money and like selling drugs. So I kind of gave up on it. And then of course 2017 happened, it goes to 10,000. So now I still sell real estate. But
What was the price of Bitcoin when you first heard of it?
$100 was what I first paid.
Okay.
$100 a coin.
Yeah, that's about the same for me.
Yeah, so I had multiple, I had probably dozens of Bitcoins actually back then. And I always played around with it because back then no one was saying this is an investment. No one was saying this is going to be like your retirement fund. This is not going to be like, you know, an ETF or stocks or anything like that. They were saying it's going to replace the US dollar. It's going to be the new form of money.
Yeah.
And I realized very quickly it will never be the new form of money. And then, of course, once the price blew up to the many thousands, then people were like, oh, it's an investment now. So it was just a narrative switch from when I first got into it to today.
And to be fair, as much as it's blown up, it's still very much in its infancy, right? Because the market cap of crypto, even with these current valuations, is still like roughly 3 trillion, depending on like give or take $500 billion, depending on what day of the week it is. Which is the size of like a single company. Like there are American companies that are that big, one single company. So it's like, if you look at the market cap of the entire like US equities market, that's, I don't know, I would guess like 100 trillion, 150 trillion or so, right? Maybe you know better than I do, I'm not sure. And then the bond like debt market is like 10x that, and that's just the US, right? So it's still very much not competitive with that, even though it's got these crazy valuations compared to the $100 that we were introduced to it with.
And it's wild because Bitcoin, if you really think about it, Bitcoin is like the worst of them. Like the technology, the fees for doing a simple transaction, they're just so impractical for any other use other than holding it and waiting for the dollar to go up. So it's been interesting to me to see that Bitcoin is the one that has like skyrocketed in price more than any of the others, because it is literally the least useful of all of them.
That's true, but in the same way, we've seen the price of gold skyrocket, even though it's the least useful medium of exchange, right? Like, when's the last time you bought something with a gold coin?
Never.
No,
Never.
no. Yeah, so it's, I mean, it's interesting that Bitcoin has maintained that kind of parallel with it. But now you do have some newer blockchains that have a lot more features and abilities that, like these smart contracts or tokens or NFTs, all these crazy things. And Bitcoin is still like 2/3 of the overall cap. It's like 2 trillion of the 3 trillion. And it's the one you can't do anything with. So, but I mean, that just goes to show there's so much to be said for the fact that that's the one that some of these large investment banks have been putting out papers saying, okay, this Bitcoin is finally the one that is okay as part of the alternative investment section of a portfolio, but none of the other ones are yet. And then now, like, we're starting to see some ETFs that have Ethereum in them, and then there's some proposed ones with like big 5 market cap kind of cryptocurrencies. So it's getting there. It's getting there. But
How do you feel about XRP, Ripple?
that's okay. That's an interesting one. So XRP is one of the oldest cryptocurrencies that's still around. It's interesting because it was one of the first ones that was not Bitcoin to make its own blockchain. Predates a lot of these other ones that have, I don't want to say eclipsed it because it still has a huge market cap. It still has a very interesting investor base, but they went very much against it gets a lot of hate in the crypto community because they went against a couple of the principles, like the fact that it only has 30 nodes in the network. And the list of nodes is one central file, unique node list, it's like a whitelist for nodes, right? This is antithetical to this idea of decentralization, which a lot of these other blockchains, any mining-based blockchain or even some of the proof of stake ones, that's where people start to argue it's less decentralized. But Ripple or XRP is super centralized. and they even have this Ripple corporation that is responsible for it.
Right. And that's what people don't like about it. It's like, oh, Bitcoin's totally decentralized.
Yeah.
But Ripple, it's actually owned by a company, and they own most of the stock of it. Yeah.
They own a lot of the tokens, and but beyond all else, they have control of this node list, which means that they have a lot of control over the ledger. And they've also been very resistant to adding any kind of like smart features, to like smart contract features. Instead, what they've tried to do is add banking primitives into the actual blockchain validator code itself, right? Like they have their version of tokens. They have some features regarding escrow, and their whole goal wasn't to be some kind of nerdy decentralized blockchain. It was to replace the Swift network. So if you look at it from that point of view, they've done everything in a very sensible way. But all the crypto bros are going to hate on it because it's not seen as compliant with these values of crypto. So yeah, I can see both ways on it. I'm not a huge fan of it myself, just because I like to nerd out over the technology side of it, which it's, like I said, very restricted on. It's more focused on these kind of business concerns that I wanted to get a bit away from by going from TradFi to crypto. But I get where it sits in the ecosystem.
Yeah, I bought some Ripple many years ago thinking, it's kind of cheap, maybe it'll go up. Didn't make a ton of money. But the whole idea behind it of it actually being a company, and it's used to settle transactions in Swift. And they also did something a few years ago that was, I think, is the best possible use case for crypto. So the way land deeds are recorded in real estate, it's like, it's all physically recorded with an individual county. There's no central national database. It's like if I want to look up who owns a property in Maricopa County, the way that I do that is very different than New York or California or any other state, even different counties within those states, all completely different, all their own way that record it.
Yeah.
Ripple had a deal in Colombia to actually record land deals on their blockchain, which it's irreversible. There's no fraud. Like if we had that in the United States, we could get rid of title insurance and title companies. Sorry, WFG, I love you guys, but I would like to get rid of you. So if Ripple ever did that in the United States, it would just be a game changer for real estate completely. And I think there's really no way to make that happen because all that stuff is recorded by the government and there's no money in it for a company. It's like for them to totally revolutionize the way real estate is recorded, yeah, it would be life-changing. It would just make the market so much more transparent and trustworthy and all this stuff. But how is the company going to make money? Like, you're going to go replace the county deed recorder's office? Like, okay, great. Those guys make $40,000 a year. Like, you're going to spend all those billions of dollars to replace that for, what? Nothing. So
Yeah.
I like the potential of it. I just don't know how to make it practical for real life.
And I mean, what you're talking about is a subset of this RWA, real world assets space within crypto, which is how do we usually it's using NFTs as the primitive crypto the crypto primitive that is representing some kind of deed for something that exists in the real world. The idea being that you just trade around these NFTs and then they use the crypto rails to do all the clearing and settlement. And that represents changing the ownership of the asset. And yeah, there's definitely a lot of people trying to crack this problem, but it does come down to how do you connect it to the regulatory side of the real world? Because that's something that crypto people are not the best at. Right? So
well, I feel like even if they were, it's like, where's the profit for them? Like, what's their incentive to actually do this? Like, yeah, it would make the world a better place, but how are you going to make money? You have to invest all this money, build out these systems, this technology, and you're replacing a guy who makes $40,000 a year. Like,
But you're replacing, you just have to build it once though. This is how all this software development stuff works, where, or the software market in general, where you build it once, it costs a ton of money, but you're replacing all those guys who make $40,000 a year at the same time.
yeah.
So it's like a big capital outlay at the beginning, but then it costs nothing to scale it all the way up. So if you look at what's the aggregate market for all of these title guys.
Oh, title insurance
probably-
is the most profitable business on the planet, because I don't think I've ever done a deal where someone's actually needed their title insurance. But the one time that anyone ever needs it, it pays for itself a million times over. Because it's like, what, $3,000 for the insurance, and then you get the whole price of the property. Like, but you know, the chance that someone ever uses it is so small that $3,000 is the most profitable business on the planet.
So if this were in a crypto system and it were built for this or modified to be built for this, you could just extract whatever fees you think make sense, whatever kind of business model. Right? Like it's pretty easy to impose a business model. Like that's how there are a lot of companies, or I don't know if I'd say a lot, but there's companies and people where what they'll do is they'll just make some kind of a smart contract or a program, or in the case of Ripple, you can just make it part of a primitive for the system. And then every time a transaction happens, well, actually all blockchains are structured like this, where every time a transaction happens, the computers in the network will take a cut. And you can also have it so that that cut goes somewhere specific. Like if you have a smart contract that is for this title insurance specifically, the transactions have to pass through that. It's the thing that's executing the transactions. So as a part of that, it could take its own cut. So I mean, there's other ways too to extract value from doing build outs like that, and have it as part of the structure of what automatically happens when these transactions get executed. So like the bigger, to me, that's not what I see as a problem. All that's to say, I don't see people who were to build this, if they were to build this, not being able to extract value from people using it. I see the bigger problem as getting through the regulatory hurdles.
Oh yeah, because everything's recorded by the government.
Yeah.
So, you know, the Maricopa County Recorder's Office, that's who you really have to convince.
Right.
Because those are the guys who are actually recording deeds.
Right.
Yeah.
Times like however many thousand counties there are.
Yeah. Yeah. So, if there ever were a way to make it work, I think that is the best possible use case for crypto. And it kind of sucks because the Columbia deal with Ripple, that actually fell through. So they tried to do that for a year, and then I guess Columbia backed out after they got a new president. So they didn't even end up doing it.
Wow.
Yeah.
Yeah, I mean, right now we are seeing, I would say like the real world asset stuff is one thing, but now there's been a lot of momentum around stable coins. And this is a similar kind of idea where you're trying to avoid the issue of having to deal with 1,000 different counties, because the way money moves is a lot less frictiony than the way that these real estate deeds move between people. But it still has the same problem with clearing and settlement not being automatic and near instantaneous. So there's some momentum in the space, and companies that are trying to address this using stable coins to facilitate USD or other currency transactions on behalf of these banking use cases. So like that's especially like that. This was the whole idea going back to Ripple. This was what they wanted to do. They didn't quite land that. They had a very ambitious vision of replacing SWIFT, which is needed for this at the international level. But now that crypto has a much broader acceptance, and here in the US, we've had the most pro-crypto government and Congress that we've seen ever. You're starting to see more momentum. It's on both the government side being open to using crypto or looking at crypto at least for these kind of use cases, and also on the investment side, on the crypto side of companies and investors being comfortable getting into that, knowing they're not going to have the rug pulled out from them like this Columbia deal you talked about. So that's that seems like something that I think will happen sooner than real world assets, just because it's a less complex version of the same problem. And the thing you build for that will probably work without little to no modification, some, but for these real world use cases. And the only piece that's missing is just this regulatory side.
Right. Yeah, when I was in New York, it was the most backwards ass state of all time. Like, I had to send physical mail to the real estate office in Albany, and that was the only way to communicate with them, was physical mail. I come here to Arizona, I can do everything online. Great, easy, boom. But you have those states where, like, especially those older East Coast states, we're doing things by paper mail. Like, that's the only way to communicate with us.
Exactly.
So, there's a lot of, like, backwards stuff you just have to get through. Because, like, if they're not even on the internet, like, that's a fucking problem.
Like, that's a really good analogy too, where the crypto space is at with this, right?
Yeah.
The problem of them being on mail isn't the fact that email hasn't been invented yet.
It's just they don't let you email them. No. You have to send us physical mail.
Yeah.
And like, even forming an LLC out there, it was like, oh, you have to get it published in a newspaper within 60 days. Your LLC isn't legal. A newspaper.
A
physical newspaper. Not like online, not like CNN.com. No, physical, local newspaper. Like, what the hell?
Yeah, it's wild. It's wild. It's it's definitely the pattern with this kind of crypto stuff. It's seen as too weird, too niche. The acceptance is slowly coming around to it, but it's going to take time. It's going to take time, and it's going to take exactly the sorts of things that I wanted to get a break from in TradFi to come to crypto for that process to happen. Like, you're seeing these government legislation that's acknowledging crypto in a more mainline way, which involves putting some kinds of requirements and various compliance. But you're going to have the people who are going to demand physical letters in the mail and physical checks, and crypto has a reputation to overcome in terms of the whole, like, magic internet money, crypto bro, like some of the stuff that like your example with Ross Ulbricht, right? Like, that's how a lot of people find out about crypto.
That's how I found out about it.
And it's kind of ironic because it's actually more transparent than the regular financial system, because all of the transactions are viewable by anyone and completely impossible to tamper with.
Right, that's how they got Ross Ulbricht. It was like, yeah, Bitcoin's anonymous if you don't know who owns a wallet.
Right.
But once they found out his wallet, it's like, oh, you sold drugs to everybody.
Exactly.
You sold a lot of drugs.
Yeah.
So, yeah. And that transparency, I think, is what makes it so useful, right? And that's why I think it would fix a lot of problems in real estate. There could be, maybe an issue where some, county recorder or whatever accidentally transfers a property to someone and now it's irreversible, and oh shit, how do we fix that? So you need some safeguards for that, but that would probably be like a 1 in a million kind of case.
Yeah, I mean, there's a point in real estate sale where it is supposed to be reversible, right? I'm not exactly sure what the process is for what that whole title transfer clearing looks like. But all it would be is just a matter of bringing that process to the blockchain. That's all you need to do. If there's steps that it doesn't do right now that it needs to do, like having someone else sign off on it, that's the easy part. So yeah, like I don't think, like reversibility, yes, all the blockchain transactions are immutable, but that doesn't mean you can't have more nuanced types of transactions, right? Like Bitcoin was just transferring balances between accounts. That's it. They have more layers on top of it now, but that was the original basic what crypto is. But then now with smart contracts and programs, you can really do anything you want in terms of having multiple people sign off on something, or having something happen only when certain conditions are met, or being able to update, state, or reverse something in some certain situations, because you're not actually reversing the transactions on the chain. You're updating with more transactions saying that the old one needs to be reversed and here's the new state. So it's a lot more flexible than it used to be, and that's the technology is not the problem.
I agree with you. Technology, not the problem. It is the perfect answer to getting rid of, the most profitable insurance on the planet. It's just a matter of getting past the regulations and obviously the lobbying, because title companies are going to lobby the hell against that.
Right.
So
yeah, like the physical mail opening guy is the same guy who's making the decision on whether to stick with physical mail,
right,
or to just go with blockchain.
Yeah, right. Do I want my job to go away? No. So how long have you been in this crypto space? You said 2018?
That's when I started to dabble in it. Only the last few years have I gotten more serious about it. So it's, like I said, I really like the technology side of it. So as that side has improved, it's given me more things to be excited for. And it's even to the point where it's really hard to keep up with everything that's going on in crypto. It used to be just like a couple of main blockchains. You could kind of, there was a lot of course, there's a lot of academic side to it as well. And for a while, it's been people publishing papers all the time on it. So you have to focus in a little bit. More recently, I've been more focused on the Solana space. The thing I like about Solana is that it's really tech forward. It's the idea is to have a blockchain that is usable to write these kind of programs on and do all these kinds of crazy use cases that we talked about in such a way that you can run the programs for an affordable price. But there's trade-offs with Solana too, right? Like it gets criticized for being too centralized, but it's less centralized than a lot of other ones like XRP. So I think that's an exciting one because it does strike the balance well. Of course, it has its own downsides like all of these blockchains do. But from an engineering point of view, there's a reason why a lot of people who want to do their own blockchain will start with Solana as the main base. If they're trying to do something crazy, they know that software as their starting point will be able to do it without having to completely start from the ground up. So I've been more recently, I've been more focused on the Solana side.
Isn't that the one that Sam Bankman-Fried was really into? Solana?
Let's not talk about it.
All right, we're going to cut out all that FTX stuff really quick. That was wild, though. That was wild.
Yep.
Uh, Because, yeah, like they were just, like they weren't fixing any problems. They weren't trying to solve anything. They were literally just stealing money from people.
Yep, and it went from FTX Arena, every single MLB umpire having 5 FTX badges on their uniform, to like, this guy's going to prison for the rest of his life.
Yeah.
In a very short period of time.
Very short. Yeah. Yeah, wild. But I guess that's what happens when something's new and people don't fully understand it yet. They're just like, oh, it's just it's like trading stocks or whatever. There's not a use case. There's actually a lot more to it. And, I think I was just trying to capitalize on, people's greed.
Yeah, and it wasn't the first time that happened in crypto. Like this goes back to the first major crypto exchange, Mt. Gox.
Yeah, Mt. Gox. I remember Mt. Gox.
Right, they just stole all the money and left, and that's kind of like the drawback of having no regulation, completely deregulated environment, is that there's nothing stopping people from doing that. And I think that's where you get into, okay, the U.S. government has put in some kind of regulations to the point where, in certain states to the point where it does. I have to admit, I'm not a fan of regulations in general, but
so I'm a real estate brother. I do what I want.
But yeah, sometimes they're needed, because otherwise you wouldn't even you'll never get traction with crypto if that's the way that things stay. You never get mainstream traction. Like a lot of these crypto companies, including FTX, they have to have a separate company for the U.S. operations, and then they have one for the rest of the world.
Right.
And that's the Wild West one, the rest of the world. And I don't recall exactly how it was set up for FTX, but I think the American one was okay-ish a little bit. I forget what happened to it, but it wasn't as bad of a fall as what happened to the international one, which also had a lot of Americans who were just signing up for the international one. So Americans got burned just as much as everybody else. But yeah, something to pay attention to if you want to, like the first advice regarding these kind of exchanges is don't keep your money on them if you can avoid it. That's easier said than done, right? It's really easy. You need the money there to onboard and offboard anyway. But if you do, and even if you don't that much, it's worth looking at which ones are more compliant and with what.
So what's your exchange right now? What do you like?
I use Gemini. So this is
I like Gemini. Yeah. So I'm also on Gemini.
And it's like the most compliant one.
I had Binance too, but when they split it to where it was Binance US versus Binance International, that's when I got off that one. Yeah. So I'm on Gemini.
Yeah. And I think part of the reason I started with Gemini was out of necessity, because I was in New York State as well, and that was the only major one that was allowed there.
In New York State, yeah, that's exactly why I got
state level. Yeah, they have state level regulation. And then afterwards, though, I realized, like, this is actually a good thing, because having this regulation gives them something to be compliant with that's going to make them, I don't want to say fully prevent, but make them the least likely to have this kind of an issue, this FTX type issue.
Actually, Gemini's existence changed my whole opinion of the Winklevoss brothers. Like, you watch that movie and you're like, wow, these guys are the bad guys. And then Gemini's been like the only crypto exchange that's actually legal and does all the right things. And I'm like, wow, maybe these guys weren't that bad.
Yeah, and it's a great example of the kind of market opportunity there is for people who are passionate about crypto, but don't mind getting their hands dirty with the whole like business side and compliance and regulation side. Because it's seen as a very unsexy thing in crypto, and that goes for crypto founders. It's not why people get into crypto. People who are engineering in crypto don't like having to deal with that, but it's these kind of unsexy problems that are often the best market opportunities. So yeah, I respect them a lot for that too, for seeing that and capitalizing on it. And then, yeah, as
Let's
a
get another
consumer,
movie
it's
with the Winklevoss twins. This time we'll make them a hero. You hear that, producers? Calling it. Johnny, you got anything else for us today?
great. Not really. I mean, whatever you do, don't invest in shit coins.
Unless it's Trump coin.
Well, unless you have some kind of alpha. Unless you have literal insider alpha, do not do it, because then you'll just be the exit liquidity for people who do.
How much money did you make on that one?
I'm not going to say anything about any trades that may or may not happen. This is not investment advice.
Does that cover you when people say that? This is not investment advice.
I don't know.
I don't know. Johnny, thank you so much. Johnny
Thank you,
Sloboda. Sloboda. Sloboda.
Both.
Both.
You got it.
Thanks, John.
All good. Thank you.